Welcome to the Morgans Edward Street end of week wrap. Matt will give you a rundown of the week in a minute, but as a bit of a change, I'd like to look forward to October and highlight some changes that have been made to the Morgans model portfolios for the month. In the income portfolio, we've taken up our pro rata rights entitlement in Macquarie Atlas Roads at $5.12 per security, and we've both Suncorp and Patent Lawyer IPH Limited on a positive watching brief as the portfolio waits some additional cash. In the balanced portfolio, Cleanaway Limited has been added as a position, following some excellent recent presentations from the highly impressive CEO Vic Bansal. And finally, in the growth, Domino's Pizza Enterprises was recently added to the portfolio following Morgan's analyst upgrade of the stock this month to an add recommendation. The portfolio's position in BT Investment Management has been increased as we anticipate another strong December quarter for the company, with next month's quarterly funds under management update and result in November seen as positive catalysts, and with the recent rebound in pound sterling, a welcome tailwind. The holding in Reliance Worldwide has been trimmed. As always, please note that our comments are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. I'll now pass over to Matt for his summary. Matt?
Thanks, Brad. Yes, this week on the markets, we pretty much traded in line with last week at 56.80, which is about 50 points above the low set in early June, which was 56.30 and still acts as the support level for our market. In the US, both the Nasdaq and the Dow Jones continue to make record highs on the back of Trump's proposed tax reform, reducing the headline company tax rate down from 35% to as low as 20%. I note with interest that the North Korea headlines are being completely dismissed by the US markets at this stage. One strong move this week has been in the US dollar, with the US dollar index, which basically compares the US dollar against all other major currencies, has finally broken a 9-month losing streak which started in January. You've probably noticed our Aussie dollar weaken as a result, with the currency trading this week as low as 78 cents. The reason for the strength in this US dollar is due to the increase in US interest rates likely in December, which we discussed last week. On the commodity front, the strength in the US dollar has impacted gold prices, with the precious metal now trading back below 1300 at 1287 an ounce, and iron ore has now officially entered a bear market, trading below $63 a tonne. Copper has remained steady, just around under $3 a pound, and a lot of interest has been in the oil price, with a break above $50 a barrel this week, and West Texas now trading just above the $52 level, but looks to be finally rising at last. On companies specifically, we have seen Oil Search, Woodside and Santos have good runs on the back of that oil price that I mentioned, and Beach Petroleum has paid up to $1.6 billion for Origin's conventional oil business, Lattice Energy, which is viewed as good for Origin Energy in reducing their debt profile. Solomon Lew is making some headlines over at Myer, looking for a seat on the board and change in management after years of underperformance. Myer's been rising on the back of this lifeline, albeit off a low base. Recently, BHP activists won the battle with BHP, choosing to divest shale oil assets as their last result, which seems to have created a new theme with a few companies under attack for underperformance. Notably, Newcrest Mining is under attack by a US fund manager for blowing up shareholders' funds in Lihir Gold acquisition made at the top of the market, which is now almost completely written off. Moving forward, I'm expecting a lot more noise around CEO pay packets, shareholder activism, and even class actions, as investors are losing tolerance for underperforming businesses. Thanks, Brad.
Thanks, Matt. On my left, we have Cameron Mole, who will run through his key pick for the week. Cam?
Thanks, Brad. Today I'm going to talk about a top 20 ASX listed stock, which has been at the forefront of plenty debate, and that is Telstra, ticker code TLS. Telstra currently trades at a 5-year low of $3.50. The most recent sell-off in the stock has resulted from their new capital management structure that will see Telstra reinvest back into the business, something they have previously failed to do. By not reinvesting back into the business, Telstra has failed to grow their earnings over the past 10 years. However, due to the strength of the balance sheet and their strong cash flow, Telstra was previously paying all earnings out to investors, which made this an exceptional income distributor. So where to from here? Well, Telstra moving forward has shifted their dividend policy to pay out 70 to 90% of underlying earnings, essentially reducing its forecasted ordinary yearly dividend payment from 31 cents to 22 cents. With the reinvested capital, Telstra will look to plug an earnings hole, which is currently being sourced by their NBN agreement. In my view, it is the way Telstra can create value from its retained earnings, which will drive the share price over the coming years. Due to the recent sell-off, new investments in Telstra will offer a 6.3% fully franked dividend or 9% gross dividend at the current price. Our telco analyst Nick Harris sees Telstra as attractively valued at an 18% discount to his $4.15 price target. Moreover, Nick thinks that the NBN will prove to be one of the great white elephants, and that Telstra is best placed to capitalise on this, albeit this is some years away. Nick believes that the NBN will ultimately stumble because the last mile access prices are simply too high. So whilst the future for Telstra remains uncertain, I'm happy to see companies that are looking to build their business and reinvest earnings to extract further growth. Given the 6% fully franked dividend, I think income investors can happily park funds here for the coming years and look to back Telstra's management to create further value for investors. Cheers, Bernie.
Thanks, Cam. Today we have ANZ Capital Notes 5 listing under the code ANZPH. Investors will receive gross floating rate distributions based on a margin of 3.8% above the 90-day bank bill swap rate. Well, that's it for another week. Please feel free to share this video with your colleagues and friends, and make sure that you like the Morgans Edward Street Stockbroking Facebook page. Have a great weekend. We'll see you next week.